always, I'll send the recording, the slides, as well as I have a slide of resources this time in this presentation that be able to take a look at afterwards to get a little bit more information on some of the things that I'm mentioning. So as I said, we're going to be talking about this. If you haven't registered your business at this point in time, that doesn't mean panic and oh my goodness, I need to do this today. Again, this is to just help us make some preliminary decisions or start thinking about what we're going to need to take into consideration before we do register the business or once we have already. Just quickly, have either of you actually registered your business yet, or is it still something that's on the to-do list for the future?
You mean
Uh,
registered it in Canada?
yes, yes, in
No, no,
Canada.
no, no, no. I haven't registered in Canada. I don't know how to go about it.
Okay, no problem. What about you, Tiago?
No, I haven't. I
Okay,
haven't.
so this is perfect. This is timely, and I usually don't make it one of the first workshops of the term because usually getting registered isn't even on our minds yet. We're really just trying to figure out what does the business even look like. So for today, I'll be talking about that. Now, correct me, Kalichi, you're an international student, and Tiago, you are domestic, correct?
Yeah,
Correct.
I'm
Awesome.
international. I'm
Okay.
international.
Okay, so what I'm going to send you then, Kalichi, afterwards is a couple of additional slides just around registering a business as an international student and where there might be some differences as between that and a domestic. It
Sure.
isn't that you can't register a business, you absolutely can. There's just a couple of other things to just be aware of and things that I can not really speak to as much informationally wise because then it gets to start into kind of the immigration kind of conversation and that sort of
Sure.
advice, which I cannot or do not want to do. So I'll send you a couple of additional slides and resources to take a look at. And then I would really encourage you to talk with the International Center and the immigration advisors there about how registering a business and operating may affect you while you're on your student study permit or afterwards on postgrad. So just to note that as well, that they're not drastic differences. It's really just about staying within your weekly hours of work per week and then tracking that when you're actually earning business.
Yeah. Yeah.
So, yeah, no problem. So, as you know, you've probably heard of from other people who've run businesses or from other people just, maybe doing passion projects and earning little bits of money. Many people do worry about registering the business at different stages of their startup than others. For some, it is, that first step that they take because it helps to just give them a little bit of momentum and validation to know that they're actually completing something before they make their first sale. Whereas others will wait a little bit longer, maybe until they actually make that first sale to register the business, or some even beyond that. But it's definitely recommended that once you do start earning money in your business, that you do go through that registration process. Again, if you've already made a sale and you haven't done this yet, it's not, time to panic. It's just that that should be kind of on the horizon, for some of those future decisions. But
Okay.
before we get into, even how to register the business, I want to start today's conversation with a little bit around like, what are even some of those common options of business registration in Ontario? And this is for any type of business, regardless of the industry and what that looks like with an individual owner or many owners. So, when you're considering the legal structure of your business in Ontario or in Canada, there are four main types of business ownership to choose from. And those are the sole proprietor, a business of one, and the business is an extension of yourself. There is the partnership, which is essentially a sole proprietorship with two or more people. Then there's the corporation, which is a separate legal entity that people are shareholders in. And then there's also the cooperative, which is similar to a corporation, but I'll talk about how it's different. Now, the ones that I already covered briefly in our, I think, Entrepreneurship 101 workshop this term are the nonprofit, the charity, and the B Corporation. Now, these ones are ones that are a little less common in Canada, but I will still go over them in a little bit of detail in today's workshop. But largely, what we're going to be discussing is the sole proprietorship, the partnership, the corporation, and the cooperative because those are the most common forms and likely ones that the two of you will fall into when you're looking at registering your business. Now, it's important to have a bit of information on like what these all look like before making your decision because the form of ownership that you choose is going to determine a lot of different things in your business. It's going to determine how your business is organized structurally, if there are ever a points in times where you're working with other partners or employees in the future. It matters and determines how money flows in and out of your business and like how it's handled come tax time. And it does ultimately just change how your business is taxed as well, depending on if you're a sole proprietor partnership or that corporation. So again, even if the business isn't registered now and we're not ready to make that first sale yet, it is something that you do want to start to consider because we just want to have a full picture of what we're coming up against when we go through this process. For some, it can be a very intimidating step to take in their business, but largely it doesn't have to be if you're looking at some of these different forms of ownership. Now, the corporation is definitely a little bit more complex, but there are some good third-party services out there that make this process approachable and a lot less intimidating than you would initially. So let's start with the sole proprietorship because this is the form that most entrepreneurs will use at the beginning of their venture. And it's likely one that the two of you could both fall into as you're getting started with your business. Now, the sole proprietor, this is one of the easiest and most inexpensive forms of business ownership to set. Especially when you're comparing it to the corporation, which I'll go into in a couple of more slides. When you look at this form of ownership, it is, again, something that you could probably register in about 30 to 60 minutes online. It'll cost you anywhere from $49 to $60, depending on where you actually do the registration. And then that gives you a business registration, a master business license for 5 years time. And one of the biggest kind of things that makes this easier is that you don't have to make annual filings when you run a sole proprietorship like you would if you had a corporation. But again, you would have to make a filing every 5 years to keep that master business license and that sole proprietor business that you operate. Again, it's about $49 if you do it through a company called owner.com, which I'll include links to and information during today's workshop, or $60 if you do it through Service Ontario, like many people will do. And it could be done today in very little time if you wanted to get it out of the way. One of the biggest advantages, again, of a sole proprietorship is its tax simplicity. As a sole proprietor, you're declaring your income through your business as personal income. So it's reported on your personal income tax form rather than having to file a separate tax form like if you own a corporation. So what I mean by that is, if you are working as an employee for another business, that is personal income that you are earning through that company that you work. It's the same case as if you were a sole proprietor earning money through your business. It's just one other column on the same personal income tax form where you're just reporting what you earn through your business next to where you're reporting what you earned through your job that you have as an employee for. So it's much, much simpler in that way. To many small business owners, though, the sole proprietor's biggest advantage is that you have 100% ownership and control within your business. You're the one that is calling all the shots. No one can tell you what to do. And again, it's you and likely a team of one that you are working with. Now, just because you are a team of one as a sole proprietor and it's just you within your business, that doesn't mean that you can't still hire employees. You can still hire employees later on in the future, even if you stay registered as a sole proprietor within your business. So it's not that it only has to be a team of one forever. You can still grow. It's just that other partners or other people that are involved in the ownership of the business, that wouldn't be the option without closing and then reopening a new one under a same or similar name. So doesn't always just have to be. But some of these advantages that you see for the sole proprietor is that that you see are then kind of contrasted with a lot of different disadvantages that you would also have in that same case. So if you set up your business as a sole proprietor, legally, as I mentioned earlier, your business is considered an extension of yourself, meaning that you assume all the responsibilities for the business. So that means that as a sole proprietor, you're personally held responsible for any debts or liabilities that your business incurs and is unable in some cases to potentially be able to pay back. So if your business failed, any of your assets, including your personal ones, could be things that were taken as collateral and used to then, pay off liabilities that you incurred within the business. That is by and large one of the biggest disadvantages of having a sole proprietorship. Now, are the two of us in this call going to be borrowing tons and tons of money right now if we were registered as a sole proprietor? Probably not. But if this was something that you remained registered as and going into the future and you were looking for, debt financing through a bank, it would be something to just note that if you default on those loans or any of that money that's taken out, it is ultimately you that's held personally liable, not a separate legal entity like if it was a corporation. So this personal liability is one of the biggest disadvantages to choosing to operate as a sole proprietor. But it's not saying that these things will necessarily always happen. Some people will register and operate as a sole proprietor forever because they know they don't need to borrow money, and it's something that they're comfortable assuming the risk of working with clients. So it's not that big of a deal. Other disadvantages of sole proprietors include the difficulty of raising money, and that is partially why I'm saying, if you're a sole proprietor, you're probably not going to be borrowing tons and tons, because it's actually a little bit more difficult when you're doing this through a bank or a traditional lending institution. Banks and those lending institutions are usually more reluctant to loan to sole proprietors because there aren't any shares to sell, again, if there was something that went wrong and the person wasn't able to actually pay back all the money that they were borrowing. And one of the biggest then, kind of things what banks also look at, which is why they're cautious to loan to sole proprietors, is because if there's weak management within the business, so you personally, and you don't have all the skills or knowledge necessary to lead the company well, that's something that a bank also takes into consideration. If it's your first business and it's something that you're just really operating and hoping for the best, there's not a solid plan in place, that's something that the bank or the loan lending institution would also take into consideration and say, okay, maybe not yet. Maybe we have to wait to kind of see if this is something that can grow into something and become more stable in the future. And that may be one of the contingents of getting a loan, is that you have to change the business structure. And because, that final disadvantage that this business is you and an extension of yourself, it's really difficult to sell in a lot of cases, if you're a sole proprietor looking to sell your business, because you are the business and a lot of your customers and your clients will come to build both a professional and a personal relationship with you. So if you're looking to get out of the business, a lot of the times it's not that you can always sell the business as is. Usually it'll be about selling some of the assets, which means that the valuation would be a lot lower than selling the business and the brand as a whole. So a lot of the times when sole proprietors are done working in their business, they'll simply close and sell what they can of their assets that are left. So all that being said, this is again the simplest and most common form of business ownership that new entrepreneurs will register as. And as long as there's not tons of liability within the business, it's something that you're largely pretty safe with registering. This can also, they talk about some of the risks of liability when you're not only borrowing money, but working with customers. That's where, things like small business insurance can kind of give you still some of that coverage without having to be held personally liable for every single thing. So for many people, this is the first choice, and for some, the final choice, depending on what industry they work in. As fashion entrepreneurs, for the both of you, I would say, this can be a good first step of registering. And just because you register as a sole proprietor, it doesn't mean you have to stay that forever. You can grow with your business and transition into other different forms of ownership. So a lot of this control, this ease of operation, and this inexpensive price tag on this type of ownership, it is very attractive to a lot of new entrepreneurs because there's a little bit less risk when you're going through that process for yourself. But for some people, right from the get-go or later on in their business, they may decide that they don't want to work necessarily alone. And they don't want to start hiring employees and be open to a lot of the other filings and taxation that comes with having employees. So they'll look at partnerships, which is what we'll kind of talk about. So if you don't want to go it alone and be the sole owner and the sole operator of your business, then you may wish to legally set your business up as a partnership. And there's a couple of different forms of what those partnerships look like, which I'll kind of go over now. So you can create a partnership in your business between two people or among 30, 40, 50. The law doesn't, limit the amount of partners that can be involved in a partnership. And there are three general types of partnerships in Canada, but whether you can legally set up any kind of these partnerships other than the general partnership, it really depends what province or territory your business is going to operate in, as well as what kind of business industry you are actually in. And I'll explain what I mean by this. So the most common type of partnership in Canada and in Ontario is the general partnership. In a general partnership, each partner is jointly and severally liable for the debts of the actual partnership themselves. So what that means is that essentially it's a sole proprietorship between two or more people. But because there is two or more people, those debts and those liabilities that you're personally liable for in the business, they're spread across multiple people as opposed to just one individual. So it lowers your risk. So essentially, two sole props. If me and Tiago were looking to build a fashion business together and we didn't want to go it alone, we could register as a general partnership. It's still $60, and then it cuts our liability and debt obligations in half right away. So it can be an attractive way of going about it. What then the next type of partnership would be what are called limited partnerships. And these differ from the general partnership in the sense that there's two types of partners that can be active in the business: general partners and then limited partners. So general partners, they have the same role and the same obligations. They can both work in and on the business, whereas limited partners can't actually take an active role in the management of the business or act on behalf of the company. Limited partners are only liable really to their investments. So they're people that are more, you hear the word kind of like silent partners. They're the people that are involved in the business and funding it, but that's about it. They can't actually work in or on the business like the general partners can. So, if there was someone who wanted to be formally involved, but didn't want to be there for the day-to-day stuff, that's what a limited partner would be. And for some people, it can be a great working relationship between someone who's in the background supporting with maybe some advisorship or some mentorship to then the general partner who's out there actively working in and on the business daily. Then the final type of partnership is what's called the limited liability partnership. So similar sounding to the limited partnership, but there is a very distinct difference here. So limited liability partnerships is usually only available to certain groups of businesses, and usually the groups of professionals like lawyers, accountants, or doctors who essentially just want to pool their resources together in order to, a lot of times, share space, but not actually be held liable for the negligent acts of the other people that are involved in that partnership. So these partnership agreements these types of partnerships are usually governed by specific legislation to the territory or the province that they operate in. And largely there's separate rules for these types of partnerships because some of the partners can actually be the corporations themselves. So limited liability partnerships, just think of them as a partnership between corporations and a partnership between corporations or individuals. They're not necessarily just an individual person themselves. So think, the example that's most common when you go to like the doctor or you go to, see a specialist for something, a lot of the times there are multiple medical businesses in one space sharing one area. That's usually the biggest benefit of why limited liability partnerships exist, is so you can pool resources together to share space, but not actually be involved in the practice of the other people that are sharing the space. So between these three different types of partnerships that are available as options in Canada, they have similar advantages and disadvantages that you're already likely starting to see. A partnership in itself can sign contracts and borrow money, which like a sole proprietor can do as well. But because there are more people involved, it eases some of the liability burden that a sole proprietor would bear by themselves. The main advantage, though, of a partnership, however, really lies in the working relationship between the partners rather than the legal structure. Some of the most successful partnerships are those where partners have usually a complementary talents or skills that the other doesn't have. And then that's when a partnership can be like the perfect match. So if it was someone who was really good at selling and someone who's really good at being social and building relationships, and then there was another person who was really good at actually building the product or the service and working in the background, that can be one of those times where that relationship is perfect. And some of the other big advantages of these these partnerships in general is that they have the same tax simplicity as sole proprietors. Partnerships don't have to file separate income tax returns like corporations would, which I'll get to on the next slide. And the financial information for the partnership is usually combined with the personal income of each part. So essentially, you're only reporting on the portion of the revenue that you actually have. So you would still use that same T1 tax form that you would use if you were an employee working for a company or if you're a sole proprietor. It's just one more place where you have to then report the amount of revenue partnership as opposed to your sole proprietorship. So again, lots of ease of simplicity and sharing of risk, which makes this type of business structure attractive. But in these partnerships, one partner ultimately, in some cases, can be held liable for debts or obligations incurred in the name of the business themselves by another partner. That's for more like the general partnership, whereas in the cases of where you're a limited liability one, it gives you a little bit more leeway to not have to be concerned with the acts of what other people are doing, because in that limited liability partnership, you're not held liable to those actions. So there's, again, different types depending on your situation. The limited liability partnership being used for doctors and lawyers, where you wouldn't want to be involved if someone in that partnership was making a decision that maybe you wouldn't have made yourself. Another serious disadvantage of partnerships that many people don't think about is actually in contrast to one of the biggest advantages, which is that working relationship. So, these partnerships can actually be some of the messiest form of business ownership to dissolve, either prematurely because something happened, or at the end of the business life because people are just done and ready to retire. So if you decide to form a partnership with in this business or in any future business, it is important to have a partnership agreement. And I've included a link on this slide for like some of those questions and things that your partnership agreement should actually cover, because these can be very messy when people have disagreements and there's not things in place for how to make decisions. I see pretty well every year a partnership or two dissolve in a very messy way because they didn't have an agreement or any sort of process for how to go about business when two partners disagree. And it's heartbreaking to see, because you see like these two really skilled people or more that really just jumped into business without thinking about, would it work in the long term? And unfortunately, I've seen many partnerships and friendships end because they didn't ask some of these questions initially. So these are kind of like the two easiest, inexpensive ones to register as. But if you're uncomfortable with, maybe being a sole owner in your company and you're thinking about maybe the partnership route, but you don't want to take on some of that personal liability that's involved, then that's when you may wish ultimately to incorporate your business, which is taking it one step further in that process. Now, I say it's one step further, it's a completely different step, but it has a lot more involved when you're looking at registering this. So a corporation is kind of like that third most popular type of business registration in Canada, and it's when you're creating a distinct separate legal entity from the owners or the shareholders in the business. So one of the biggest advantages here is that, no member of the company can be held personally liable for the debts, the obligations, or the acts of the company. Essentially, an owner or a shareholder is only liable for their unpaid portion of shares that they actually own. So when you think about, the sole proprietor in the partnership, you're doing business with the individuals themselves. So if something goes wrong, those individuals are the ones who have to fix it. Whereas if you have a corporation, people are doing business with the corporation themselves. It's a separate legal entity, just like we are as individuals. So if something goes wrong, you have one more layer of protection to protect you personally from anything that went wrong in the business or acts of other shareholders or people. If you ask any lawyer, what to register your business as, they'll tell you a corporation because they're trying to think of like how to protect yourself the most. So for a lot of people, they will go this route because they know that maybe they will have to borrow some money in the future. Maybe they're working in an industry where there's a little bit more chance of things to go wrong, or they're working with really big clients who they would hate to make mistakes, and ultimately hurting their clients' companies and having that be held personally liable. So while this limited liability isn't a big advantage for the corporation, it's one of the most expensive and difficult forms to set up and operate, especially if you want to operate across Canada or into different countries. So you have to, in Canada, if you register federally as a corporation, it gives your company the right to operate under its corporate name throughout Canada. But then you also have to register at the provincial and the territorial level, where you then also have to, register in Ontario, Alberta, Manitoba, if you're planning to sell primarily in all those locations. And that then gets more and more expensive and more complicated as you look at each individual place. But, there are still some big advantages of this if you're willing to figure out what that process looks like, which many people do, or whether you can afford to work with, an accountant or a lawyer who is capable of doing these things for you. When you look at some of the big advantages of the corporation, it's easy to raise capital from investors or financial institutions, again, because you've taken that next step into creating a safety net for yourself, for the business, and people who deal with the business. And in a lot of cases, being incorporated can be a requirement for doing business with the government or with other businesses within Canada or outside of Canada. Some people, won't work with you if you don't have a corporate business number. If you just have a sole proprietorship or a partnership, some people just aren't comfortable doing it because the personal liability that could be held to you could ultimately come back to them if something were to go wrong businesses. And one of the other advantages, though, is that you can be paid either in a salary or dividends at the end of the year, allowing you to kind of optimize your tax situation and pay the least amount of tax that you would necessarily need to. So if you were working with an accountant, they could tell you individually, is it better to pay yourself out with a salary incrementally throughout the year, or to wait until the end, give yourself dividends as a way to ultimately get taxed less for the least amount necessary. So if you work with an accountant, you can actually make a little bit more money than you would in those sole proprietor general partnership situation. Okay, then when we flip that over and kind of look at some of the disadvantages, corporations are usually a little bit more expensive to register and then continually do upkeep and maintenance. So in corporations, if you do it yourself, I believe they cost about $300 to $400 to register provincially within the province of Ontario. That's if you do it yourself and handle all the paperwork and filings. But if you work with a lawyer, it's probably going to cost you around $2,000 to build that relationship with the lawyer, have them register on your behalf, and make sure all your forms and documents are done properly. Where you get the biggest benefit here of working with a lawyer or an accountant in some cases is that you have somebody checking these things for you to make sure that you're doing it properly. If you do it yourself and you want to go the $300 route and you do something wrong or you make a mistake on your filings, it's not that like they'll tell you, what you did wrong and give you the opportunity to fix it. It just won't get put through, and then you'll have to do it again and try and pay another $300 to file and hope you did it right this time. So if you make some mistakes, it can ultimately start to cost you more each time, but There are people that do it themselves, and there's third-party automated services like owner.com that'll show you, where you could just get them to handle it on your behalf, but it's not usually custom made for your business. It's just templatized versions. And an added expense too, when you look at these corporate business structures, that then you have annual income tax filing returns that have to be done through the CRA and the Provincial Ministry of Finance. And then if you're in other provinces and territories, it has to be done there as well too. So it can become a lot more complex. And if you're trying to go this route yourself, you usually end up becoming a bit of an accountant, because you have to learn all these different processes and territories. And if you don't do it properly, or you just forget to do it or make a mistake, you can be held personally liable if you don't. So it's not that you have complete, removal from this process. You still are, ultimately held responsible for the things that you must do within your company. And if it doesn't get done, then people will follow the paper trail back to the different boards of directors or own shareholders. But depending on the type of business that you're that you're hoping to operate, this can be your best choice. And again, if you ever meet with a business lawyer, they will always tell you that the corporation is the best route because it is the safest. But if you aren't capable of paying this additional price tag, or you're not able to figure out this more complex process, then sometimes you can start as a sole proprietor or a general partnership, and then as you grow and develop your business, you can then register as a corporation later on when it makes more sense, or when you have the money to be able to afford to register as a corporation. But for something where you're working in clothing to kind of get started, you're probably okay again, we're starting as a sole prop. And then if you want to go the corporate route later on, that is definitely a choice to make. The fourth one that we look at is the cooperative. And it's a little bit less common than the corporation, the partnership, and the sole prop, but it is one that you do see pretty frequently in Ontario and kind of broadly. So a cooperative, or what people usually call like a co-op, not a co-op in school, but a co-op business, is an organization owned by and operated for the benefit of its members, and therefore profits and earnings are equally distributed among the members. So it's not a nonprofit because co-ops can be for profit, but it's usually that the people involved in this co-op are part of a certain community or a certain group, and they're operating the business to benefit themselves and other members of the community. So there's usually some sort of paired social good in this business model. So the co-op, again, it can be for profit or a nonprofit, but it does have to have a minimum of 3 members. So if you were looking at 2 or less, being just 1, you'd have to look at some of those other types of business structure. But a co-op, I actually had some entrepreneurial co-op students register as a co-op in the past, and they had to have 3 members in order to do it. There was 2 of them who were fully in, 1 that was a little on the edge, and they went to go into the registration process, and they found out that all 3 had to be active, and you have to have at least 3. So the co-op, it's in terms of actual structure, it's more similar to a corporation because there are shares and shareholders, as opposed to the sole prop and the partnership, where it's just the individuals themselves. And why it's similar to this corporation is because there's shares that that members have to actually purchase, and there has to still be a board of directors that oversee how shareholders and members actually operate the business. Where it differs from the corporation is because each member that's involved in the co-op gets 1 vote when they're trying to make decisions within the company. In the corporation, usually it's the person with the most shares gets the most say. So if there's somebody with 51% of the shares, they usually have total say in what happens in the business. Whereas a co-op, it's more collaborative because each individual member gets 1 vote and no person has more say than the others. So that can be one of the big advantages there, but it can also then, make decision making very slow because you have to get everybody, or 51% of the members, on board for decisions. And then usually there's the risk of conflict that can arise between members. There's some that are very really wanting to do one thing, but others that are really wanting to do another. So a lot of the time it can make decisions very slow, but ultimately still get that limited liability because it's spread across each individual member as opposed to just one person. So similar to the corporation, but a little bit more equitable in decision making, I guess you. Now, we talked a little bit about, nonprofits, charities, and during our Entrepreneurship 101, one of our first workshops of the term. But really quickly, just to kind of recap, and then I'll talk about what B Corp is, a nonprofit organization is essentially, again, just an association, a club, or a society that aren't charities because they operate exclusively for a specific purpose, but it's not as restricted as what a charity is restricted to. So, nonprofits can be, operating for welfare, pleasure, civic improvement, just plain and simple recreation and fun. They're just operating for something else other than profit primarily. And those nonprofit organizations kind of follow like a similar corporate business structure. Whereas registered charities, these are a type of nonprofit, but they're usually restricted to being a public or private foundation that's created for a very specific purpose that falls within one of those four categories of the relief of poverty, the advancement of education, the advancement of religion, or just a purpose that benefits the community as a whole, like an animal shelter being the classic example. But then you look at kind of the last form here, which is the B Corporation, which is essentially just a certification that designates a business, a corporation, that is meeting high standards of verified performance, accountability, and transparency on factors from employee benefits and just personal experience working within the company, all the way to charitable giving, where they source their supplies from, and how they operate business. And essentially, they're deemed to be doing a net positive to the society and the world that they're operating in. So, in order to achieve this B Corp certification, it is a very long and extensive process, and it's one that there's a lot of check marks that you have to tick. It's harder to become a B Corporation than it is to be a charity. So some of those things that you have to, check box in order to become a B Corp is you have to demonstrate a really high social and environmental performance by achieving, they have like a scale that's called a B Impact Assessment Score. And there's different areas that you have to have certain levels of scores. You have to have, in this case of environmental and social performance, about an 80 or above to pass a risk review. If you click on these links in the slides when I send them out to you afterwards, you can read all about this. Like, they are extremely complex and there's lots of steps, but I'm really just introducing it as a way to know that if you do go some of these corporate routes, there's different ways that you can kind of direct yourself in the future as some of those other things that B Corps have to comply with is they have to make a legal commitment to changing their corporate governance structure to be held accountable to all stakeholders, not just shareholders, because a lot of corporations, they are trying to maximize the value and the benefit for shareholders, people who own shares in the company. But in order to become a B Corp, you have to not only prioritize the shareholders, but also the stakeholders. Stakeholders being the people that are affected by your business, even if they're not your customers or the people in charge of your business, but just people that are affected by it. So you have to prioritize their needs as well too, in wherever jurisdiction that you're in, province or territory. And you have to have some level of transparency by allowing the information about how your company operates be publicly available on this website that's called a B Lab website. So you have to have just pretty much 100% transparency in how you operate, what you do, where you source your materials, your employees, and everything from, and just essentially deem that you're doing a net positive and no harm to the stakeholders, the environment, the society, and everything that your business could have an effect. So really cool to read about. It's definitely something that I know very few companies that are actually certified B Corps. But it is, if it's a goal and, being socially conscious and environmentally conscious is something that you really, really value, you can look at this as a potential future option, but definitely not necessarily at this point. So as I mentioned, at the beginning, and what I'm saying here again at the end is, that you really want to just start considering these things. And why on each slide the text is highlighted blue is because I'm giving you links to go and read more about this yourself. In the fast track textbook that we have paired with this course, where it's talking about business legal structure, that's the American stuff. So that's why I include this as a workshop today. You definitely can still read about the American structures, but the ones in Canada are a little bit more relevant here. I'm not, giving you any sort of legal advice on where you need to, actually, or how you need to register your business. All of this information is very widely available out there. I'm just putting it in one place as a way to deliver and hopefully help you start to make some choices, or at least give you some things to think about when you're looking at registering. But you really want to think about this structure, because most people think about naming their business and how they want to brand it, but they don't always think about actually creating the business structure, because this affects a lot of the things from, administrative and setup costs being a lot lower on the sole prop side versus higher on the corporation side, and all the way through to like how you do your taxes at the end of the fiscal year. So it is important to kind of think about these things, even when you are also building the brand and everything else as well. But it's important to, keep in mind that choosing a form of business ownership, it's not a permanent decision, and it is something that you can alter if your circumstances do change. Many small businesses, as I said, they'll start as sole proprietors or general partnerships, and then they'll transition and become a corporation at a later date. So the form that you pick now is most suitable for, at this specific circumstance, which is why a lot of people will choose that sole proprietorship, because it's simple and inexpensive. And then you can review your decisions as your business grows over time. Now, what does that actually look like though? Like let's say we register as sole props today, or in a couple of weeks or a couple of months, and then our business grows over the years, and we're like, okay, I think I'm starting to get a little bit more liability and things that I don't want to be held personally liable for. So how do I go about actually changing and becoming a corporation? So I get asked this question from like clients that I've been working with over a long period of time, and there isn't necessarily like, a button to click or a one-step process from a sole proprietor to a corporation. But it is something that essentially you can transition into, by just, opening that corporation, selling your assets from your sole proprietorship if you have any to that corporation, and then closing the sole prop. So while there isn't that, single step-by-step process, essentially you would just open, that new corporation under the same or similar name as your sole proprietorship or general partnership. You would then, sell or give your assets from that company to the corporation. Then you could cancel your registration for that sole proprietorship, close any, program accounts that you have open with the CRA or your business bank account, and then you could open those same program accounts for the corporation. And essentially, that's the process. It's not a one-to-one, you just click a button, fill out a little bit of another form, and pay some more money. Essentially, it's just close the existing one, open the new one. But it is something that you can do at any time throughout your business's life. So not a permanent decision, what you choose in the next little bit, just something that you need to consider now and then reconsider as your business continues. Now, let's talk about, kind of like what that business registration process looks like in Ontario. And I have two slides here for like, what it looks like as a sole proprietor or partnership, and then what it looks like as a corporation. And this is through using Service Ontario as a way to actually register your business. But there is another way that you can utilize that makes it a little bit easier and a little bit less expensive. So when you're looking at registering a sole proprietorship or a partnership, essentially you go to the Service Ontario website, which I've linked in some of the slides at the end of today's workshop, and you can conduct, you choose a name for your business usually when you're going into this process, or you already have one in mind, and then you can conduct a name search to see if there are any names of companies in your area that are the same or similar, and ultimately make the decision of if you want to, still use that name or come up with something that's a little bit more different. You definitely don't want to be too similar to some businesses that are already out there because if people are Googling them and they've been in business longer and they have a little bit more of a reputation, then it makes it harder for people to find you. But you can do a actual name search through the platform and it'll tell you, is this essentially a good idea for the name? You can go through the actual registration process, which isn't a long and intimidating form. Essentially, you just fill out the information of the industry you operate in, your personal information, your business address. With home-based businesses, you can use your address, and then you would open any program accounts afterwards through the CRA. Like, if you were collecting HST and GST, if you had employees and had to do payroll deductions, or if you were importing tons of materials from overseas, you could, import export program accounts too. Then it's ultimately, your responsibility to look and see, like, are there any other licenses or permits that I need that are industry specific? So for some people, it means by going to look at this website that's called BizPal, where essentially you would input the business you're operating, the location you're in, and it would then give you a list of different licenses or permits that you may need in order to operate in your municipality that you fall within. But really, that's about it. It's not that overly long and complicated of a process when you're looking at a sole proprietor or a partnership. When you're looking at actually going through the registration process for a corporation, that's where it becomes a little bit more taxing. So you can do it through the Service Ontario website again, and that's where you would start with a very similar process. You'd have a name in mind, you conduct a name search, which you have to pay for, I should mention. I think it's like $50 or something like that. And then you have to go through and complete all the other articles of incorporation, is what they are called, in order to complete your business registration, which includes a cover letter. It includes like all the different rules that will govern how your corporation actually offers. And I've included some different links here where you can actually click on and look at, like, what are those articles of incorporation, because there's a couple of different ones that go. So this is where it starts to get a little bit more complicated, and it's something that you can learn, very much yourself, but a lot of the times it's recommended that you work with someone who's either done it before, because they can help you out and tell you if you're making any mistakes. You can work with an accountant or people who perform accounting duties, because some of them do offer incorporations registration as an add-on service, or in the best case, likely from a lawyer or a paralegal or someone who's does this for a living, because they can usually complete it for you or with you and make sure that you do it properly, which is sometimes worth the money, because it just gives you peace of mind in the back of your done it properly. Now, there is one other place where you can do these registrations, and it's called owner.com, spelled OWNR. Now, owner.com is a third-party service provider with a completely automated workflow that can help you register your business, and actually for a little bit less if you're registering as a sole proprietor. So owner.com was started by a group of lawyers way back in the day. I don't know how long it's been open, but it's been for quite some time. And they created a workflow to help people go through the business registration process in Ontario. So if you're registering as a sole proprietor, it actually costs you $49 instead of $60, because as you go through the workflow, it will try to upsell you and get you to open different accounts with people who sponsor them. Like, one of them is, I believe, it tries to get you to open an RBC business bank account with them, but you don't necessarily have to do that at that point in time. So they eat $11 of the registration for you in order to advertise to you and kind of try to upsell you along the way. But it's something that you can just click no, I'm not interested, and you get it a little bit cheaper. You can't actually register partnerships though through owner.com. They only do provincial within Ontario sole proprietorships and corporations. So a corporation, they charge as well $499 in order to help you get through that process, and it can be done relatively quickly as well. So they charge you an extra, I think it's like $200, because I believe the fee, if you just did it yourself through Service Ontario, is $300. but they charge you an extra $200, which is a very good deal to help you go through and use like templatized articles of incorporation, cover letters, and all the different forms that you would need in order to get yourself up and running sooner than later. I know many people that have used owner as a way to register as a sole proprietor or a corporation. So it's something that I would say, if you're looking to get, maybe you can't work with a lawyer and you want to go like the corporate route, this is a very good option for a lot of business owners. And if you're going to do a sole proprietorship, I would recommend using owner anyway, because it saves you $11 and you go through the same process. It lasts 5 years. So you really just have to click no and ignore a couple of ads along the way. So really good option that is out there, and something I would say you can check out afterwards, and I'll include links in the slide. So we got one more section here. We're at pretty close to 11. We'll probably only go till about 11:30 today. Do you guys want to take a quick 10 and then we'll come back at 11:03? All right, sounds good. I'll pause the recording. I'll see you guys back here in about 10 minutes. So we've talked about, kind of broadly what those different types of business structure look like in Ontario and Canada. And we talked about, like how we can actually go through that registration process. And I've really encouraged you guys to check out some of the links that I include, because I'm giving you guys a snapshot of like what these business formations look like and when to kind of best use them. But, ultimately it's a decision that you have to kind of make yourself, which I'm happy to discuss with you one-on-one if you have questions as you look to make this decision sooner or later, depending on your situation. But I want to talk a little bit about one of the aspects of registering the business, which is around registering the actual business. So when you go through the registration process, there's kind of two steps to it. The first step is registering the actual business attached to your personal name, but then there's also the second step of choosing to register a name for the actual business. There are some instances where you don't necessarily have to register a business name. You can just use and operate under your exact legal name, but there's some specific circumstances when that will be applicable, as well as if you're a corporation, you can choose to be a numbered corporation, which would still count as a name instead of a operating name or things like that. So I just want to clarify this additional step, because a lot of the times when people get into the registration process for the first time, they have questions here, and it's really some simple answers. It's not overly complicated. So I have this like just really quick chart that just shows, this is specific to Ontario, the form of ownership, and then do you have to register a business name? So with a corporation, yes, if you're registering a corporation within Ontario, you do have to register a name, even if the name that you are using is just the default standard number given for your corporation. There are many types of businesses that will operate just as a numbered corporation, is what you'll hear the word as. And it's where essentially they do have a name. The name is just the number of what their actual corporation is. So it's in some situations where maybe branding isn't as important, or they already have enough customers to supply to that they're not looking to try to find more. A really good example of this is in manufacturing. A lot of corporations in manufacturing or things like that, they're not as worried about the brand behind the business themselves. They supply something that there's a very clear buyer for, and they were developed usually for that sole purpose of that buyer. So branding isn't always of utmost importance to them. So there are some cases where a corporation, it will always be named, but it might actually be a number instead of a name. A partnership, if you're registering in Canada, you do need to have a business name registered and attached to it, except if you're in Newfoundland and Labrador. Newfoundland and Labrador tends to have some weird exceptions for their own people. But if you're looking at Ontario and there's a partnership, so if Tiago and Kalichi, you guys partnered, you would have to have a name for the business. It's not where you could just operate as Tiago Pissarra, Kalichi Okiri, but you would have to actually put a name to the business. If you're a sole proprietor, that's operating using the owner's exact legal name. So an individual, one person operating with no changes, no additions, no short forms. You don't necessarily have to register a name with your business. But if you're a sole proprietor that's planning to advertise yourself as another name or another brand, then you would have to register that. Unless again, you're in Newfoundland and Labrador, they do things a little bit different out on the East Coast. So I'll break this down a little bit more. So when you're so really, I guess the big exception is, if you're a sole proprietor using your exact thing, that's really the only time when you don't have to actually worry about attaching a name to the actual business itself. So I'll go over when this might happen. The two of you, you're already starting to develop a brand and having a bit of a name behind it. But Tiago, in your case, if maybe you decided not to, use a brand name in the future and you're going to go the designer route and you are the brand, it is an option where you could use your exact legal name. You don't have to worry about registering something different. So if you were using your legal name in your business, again, you can't have any additions, subtractions, short forms, or anything added. It has to be your exact legal name. So if it was me, and I was operating as my legal name, I would have to be Nicholas Klimbicki. I couldn't be Nick Klimbicki or Nick Klimbick or Nicholas Klimbick or anything like that. It has to be my exact legal name that it shows up on my ID. You can't add anything at the end that's like, Inc. or Co. or partners. Essentially, it's just your full name. So, if example, you were a business consultant and your name was John Smith, you can't call it John Smith's Business Consulting Services. If you did, you'd have to register the name. But if you're just John Smith and your brand and your reputation is everybody knows you're a business consultant, you can operate without actually having to register that name. Now, is it a good idea to go without registering a business name? I mean, in most cases, no. You likely want to have some sort of name to be associated with the brand and the business. But if you yourself are the unique brand and the unique service, like a consultant, if you're an author, if you're a musician or an artist, using your own name may make sense then. So if your business is in, any other industry like manufacturing and you intend to, expand your business by incorporating or by taking on partners or employees or, putting out a logo or things like that, that's when it's probably not the best decision. So for most, they usually do register a name when they go through this process. But for some, they choose not to because they are the business and they are the brand. Is it the best decision? It really depends on, yourself. A lot of artists and musicians, they will go this route. But most people in, fashion, if you're, a specific designer, maybe in that case, you are just using your exact legal name. But a lot of the time people will shorten them or add an Inc. or a Co. behind it. So it's really about, just going through that process and knowing what the future kind of looks like for your business based on how you're doing.
I have a
So
question.
yeah, Tiago,
Sorry.
go for it.
Sorry. How would one go about so say if I started with a brand name and then wanted to change and just use my legal name or vice versa if I started with is that process easy to go about to changing that or
Yeah. So in some cases, I don't know the exact case, but in some cases you can just go into your business registration, because there's a whole portal online where you can then have the option to change the name. If there was ever a case where it didn't let you for whatever reason, it would just be closing that business and then reopening another one. So if you were starting as, Tiago running your business and then you wanted to add a name to it, that would probably be a bit of an easier process because you could just go back in and register a name attached to the same business. But if you were, let's say you were Tiago Designs and you wanted to change to Tiago Creates or something like that, that you might have to actually close the sole proprietorship of Tiago Designs and then just re-register another one under Tiago Creates. It would cost you an extra $49 to $60, but for better branding and for better image moving forward, a worthwhile cost.
And oh, I just had a second question and it left my head. It'll come back to me. I'll ask it after.
If it comes back, just feel free to interrupt or throw your hand up. No problem. Awesome. Okay. So if you need more information or you have things that you just want to read up about registering your business online, there are numbers that you can call. which I've included here on screen, but there is also, just the simple links. Owner.com, they have a really good overview of, what your business is, and then kind of how you should register, what you should be aware of. And they have like a blog as well with some really good articles on different comparisons between positives, the negatives, and at what stage of development you would want to consider maybe transitioning to a corporation from a sole proprietor partnership. Service Ontario, they also have a really good page too, where it explains a lot of the different elements of each type of business registration. So I would really encourage you guys to check those out before making a decision. And again, I'm happy to chat with you both one-on-one about, what decision you're making and if it seems right given development that you're in currently. The next, as I mentioned kind of briefly, is like, you have to also think about, do you have to register your business municipally? So there are some types of businesses that do have to get a license within, the city of London specifically, or the city of Kitchener if you're not in London. So it's just important that we usually check that out. For fashion businesses, normally you don't need any sort of municipal license, but it doesn't hurt to check. Municipal licenses are usually for businesses related to personal care, like hairstylists, tattoo shops, lash or brow techs, things like that. Food businesses, transportation businesses, and contractors in the trades. Like those are like the most common categories of people who would also need to register municipally. Because what we were talking about registering was largely provincially, but then I did mention a couple times where, like in the corporation, if you wanted to register and operate all over Canada, you'd have to do the federal and then each individual province. There's a comprehensive list that's usually available through whatever city or county that you operate in if you're not necessarily part of a big city. So the City of London has a business hub through their website, and it lists every single type of business that would need a municipal license and what the cost is that's associated with that. So again, fashion business isn't usually one that needs it, but it never hurts to just take a look and just give yourself that peace of mind that it's not something you have to worry about. Each city or county is different. They make their own decisions on what type of business does need a municipal license. So it's just important to do your due diligence and take a look. But I included the links to the City of London. So Tiago, in your case, you would just have to take a look at Kitchener and just see, is there something that you would have to worry about? But probably not. Fashion isn't usually one that needs it. Okay. So then the next step after you kind of look at, registering the business, the next question is usually, what about tax? Do I have to charge and collect HST and GST tax on the sales of my business? And in most cases, the answer is yes. But if your business is new and its gross income is under $30,000 over 4 consecutive quarters, you don't necessarily have to. You can voluntarily, but it's not something that's mandatory if you earn less than that. Kalichi.
I have a question, please.
Yes.
What's the difference between HST and GST? I've always wondered.
Okay. Good question. So it depends on each province or each territory. Some people will have HST, some people have GST. They don't usually have both. So GST is good service tax. HST is harmonized service tax. So it just depends on the individual province or territory. Some charge HST, some charge GST. Don't ask me why. That's definitely a question for an accountant. But just one other layer of just complexity to kind of look at. I've included an article at the end where you can read up on HST and GST, but it usually just depends on the province or territory that you're in.
Okay.
So yeah, goods and service tax, harmonized sales tax. I guess.
I have a second question.
Yeah.
Okay, this is I've been to 2 provinces, but this is one I've lived in longer. So in this province, when in the retail, what I'm sure of, when you buy stuff, sometimes you see HST. I just assume it's the one going to the government. I see GST. Do retail businesses charge both, or in this province?
Oh, yeah. So I think that's where, again, it would be dependent on like what province or territory you reside in. So if the question is, like, is the question more like if I sell a little bit in Ontario, a little bit in Alberta, like, how do I know which is which?
Yeah.
Okay. So that's a good question. And it's one that I can give you like a partial answer to. So
Okay.
if you are registered and operating primarily in Ontario and you're looking to charge tax, I believe that is HST. I believe. I'm not positive, but I think it's HST. And then let's say you were operating or you made a sale in another province because somebody from Alberta learned about your brand and was like, oh my God, I have to have. It's not necessarily where you'd have to look at registering for GST in that province if they also had it. Because again, if you're under that $30,000 over 4 consecutive quarters, it might not be necessarily something you have to worry about making one individual sale in that province. Now, this is when you start to get into accounting territory, and I can't give you a full answer because then the question becomes, okay, so like, what is the threshold? Like, if I start selling it because a lot of people in Alberta find out about my clothing and they want to keep buying it. Do I have to register and collect both? Likely yes. But that's something that you'd probably have to talk to an accountant about because when you start talking about taxation across provinces and where you're registered and how to collect, you do have like kind of the responsibility to adhere to each province's and territories individual taxation requirements. But when you get into that conversation, that's usually when you got to talk to an accountant who specializes in that kind of thing, because it can get pretty complicated pretty quick. But if you made like one sale in Alberta because someone just found your website and you shipped it out there, it's likely not a big deal. It's just if you're like actively advertising and you're registered in that province and you're targeting those customers. But if it's just like a one-off, it's not usually a big deal. If one American person bought from our website, we wouldn't have to register our business in America. It would just be something to note to our accountant that came from an American customer, and then they would deal with it on there.
Okay, I understand. Thank you.
Yeah, good questions though. Definitely great questions. So again, when to register and start collecting HST and GST in Canada. So again, if you're staying under that $30,000, what's called the small business threshold, it's not a mandatory requirement. There are some types of businesses that always have to, like anything related to transportation, for example, they always have to charge and collect HST and GST. But a clothing business or an e-commerce clothing business, it's not necessarily something you would mandatorily have to do. But there is, always the option to do that ahead of time. You can choose to charge and collect tax from your customers before you hit that $30,000 threshold. So the answer is, why? Why would I do that if I don't necessarily have to? And there's kind of a two-pronged answer. The first part is reputation. Some people, when they're buying from a business and they don't pay, or sorry, they don't have to pay tax on a sale, they question it. They're a little curious. They're like, well, why don't I have to? Like, because people don't understand that there's not necessarily this small business requirement. So reputation could definitely be one of those aspects. But one of the most important elements of like why you would do it beforehand is to take advantage of what are called input tax credits. Input tax credits, again, this is where you start to get into accounting territory, but I've included an article at the end. It's essentially a way of getting back the portion of tax paid on your business's expenses at the end of your fiscal year. So if you had a business, let's say, with a lot of startup costs, one where you had to buy a lot of materials, a lot of equipment, a lot of tools, and you're going to be paying quite a bit of tax on those sales because when you're buying them from Home Hardware or you're buying them from whatever sort of supplier, it's usually going to be the $100 plus tax or the $10,000 plus tax. That would tend to add up pretty quickly. If you register and collect HST and GST tax from your customers, you can file for input tax credits, which gives you part of that tax that you paid on those expenses back. So you get it paid back to you. If you're not having a GST and HST account number and you're not charging and collecting from your customers, that's not an option. So when can it be beneficial? Usually when you have really high startup costs within your business, you would probably want to start charging and collecting immediately from the first point of sale. If you don't have tons of startup costs, it's maybe a couple hundred or a couple $1,000s, and you're going to start part-time or relatively slowly, it's probably not something that you have to be concerned with. But it's just important to know that like if you do voluntarily choose to do this, you have to actually charge and collect HST from your customers in Ontario. I've heard horror stories from clients who they weren't hitting the $30,000 threshold. They thought they'd have high startup expenses, so they registered for an HST number, but then they never actually charged their customers for it because the expenses were a little bit less than anticipated. And then come the end of the year, you still have to pay back that money on all those sales that you made. So if you don't collect it from your customers, it's not like you can just reach out to them and say, hey, Tiago, you bought from me 4 months ago and it was $100 plus tax, but I only charged you $100. Send me the extra $130 or the extra $30. No customer is going to respond to that email, right? And so it's just important to know that, like, if you opt in because you have to or because you voluntarily choose to, you have to collect that money. Even if you don't, you have to pay it back. And a lot of the times, you know, if you talk to an accountant or a person with experience who's run a business, they'll tell you to usually open up a separate bank account to keep that tax in, because that money that you collect, that $100 plus tax, that tax money, that is not yours. You are just holding it for the government until the end of your fiscal period when you give it to them. So it's important to know that if you do opt in, make sure you charge it and make sure that that's held in a separate account, because that's not your money to spend or put back into the business. You're just holding it. And if you spend it, you still have to give it back to them. So just a caution there, because I have seen a horror story where that happened, and you don't want to be that person. So it's important to know again that, you know, legal, financial, and accounting advice, it should always come from a lawyer or an accountant. I am not a lawyer or an accountant, nor do I want to be one or give you advice in those areas. What I am giving you today with a lot of this information is general information that can be widely available, but I'm putting it in a way that is hopefully palatable and easily understandable, but also as a way to just get you acquainted with some of these topics and pieces of information that are out there. Anytime that, you know, you are looking for accounting advice or legal advice, you know, you can ask a business coach or an advisor or myself, but again, I will give you a maybe or a half answer, or again, general knowledge. I can't give you that advice, nor do I want to, because I don't know enough about it and I don't want to point you in the right direction. So it's important to know that you do reach out to those people for those specific questions that you have, and doing some research online yourself from reputable sources. That being said, you know, speaking with lawyers and accountants, it can get expensive, and it can usually get expensive pretty quickly. So there's a couple of additional resources I've included here, which you can take advantage of personally. So within Western, they have what's called Western Legal Clinic. Western Legal Clinic is essentially a clinic that is run by the law students at Western. It's overseeing the work that they do by their professors, who are usually lawyers or retired lawyers, and people who have done this for a living for a very long time. They do a lot of this work pro bono to give their students experience in a certain area. And it's a service that they offer for, I think it's $100 to $200 as an administrative fee. And then they'll work with you for free in order to help you with some of your legal questions that you have related to your business. So some of the things they can help you with, incorporation is the first one. They will have, you know, an assigned student who will help you go through that incorporation and walk and, you know, be able to do that for you for a lower fee. They also can help with, you know, shareholders agreements, partnership agreements, if you're entering into a partnership, a licensing agreement, a supplier agreement. They have a lot of different things around trademarks. They can help you with your name registration if you choose to get them to help you with that. It's something where it's a free service for people that I believe are affiliated, that are associated with the City of London. You don't have to be a Western student. You don't have to be a Fanshawe student. But it's something that, because it's a free service and one that is pretty good from what I've heard, there's usually a bit of a wait period. I've had student teams in the past that have went there for partnership agreements in particular, and they're very well done, and they help you complete that document. But it usually takes about 4 to 6 months to get in, because it is a free service. There's usually quite a bit of wait list, but it is something that is available if you're looking at, you know, talking to somebody or getting some more information or help with going through some of these violence reasons. So I'll include a link afterwards where you can check that out and take a look. And if you have any questions, get on the wait list and, you know, potentially work with them. Another option is what's called Pro Bono Ontario. Now, they are more of a helpline as opposed to a like actual legal service or legal clinic. But you can call them, and I've included a link in the slides as well afterwards, to actually ask some of these preliminary questions and get a little bit of legal advice for free. But then once you get the advice, usually then you have to pay for some assistance or go to somewhere else to get the help, which means pay for it usually. But you can see on this page that I've included, they do have quite a bit of, frequently asked questions that you can call with. And a lot of the ones, like, I'm starting a business. Do I need to incorporate? How do I start a nonprofit? Should I incorporate federally or provincially or both? So if some of these questions are things that are coming to mind and you're not quite ready to, shell out a bunch of cash to speak with a lawyer, I would recommend, you utilizing Pro Bono Ontario. Again, it's a free service. You might get put on hold for a couple hours, but a couple hours on hold where you can go about your day and then, ask some questions and get some free legal advice, a price to pay for free advice. So I've included these as 2 free resources. So, if you have any questions about that, or, Kalichi, in your case, where, you're importing goods from another country to be able to sell in Canada, it, doesn't hurt to have this as a resource where you can ask some of those questions for free without having to pay a couple $100 an hour to sit down with a lawyer. So there are some free options out there, but again, it's usually a wait list or waited on hold because it is free. So I've included on this last slide here, just so I didn't have to put it in the email, a lot of the articles that I sourced information from these in today's workshop. So Service Ontario, Canada Revenue Agency, how to incorporate owner. These are all articles and websites that you would look at for registering your business provincially or federally. The City of London Municipal Business License, I've included just because in the City of London, so it's easily accessible there. You can see the complete list of businesses that need a municipal license. Again, I don't believe fashion is one. Any other additional licenses or permits that you need, BizPal is a great tool to get yourself started with that research. I've included the HST and GST article, as well as the language around the small business threshold, when you have to collect, how to get an HST and GST number if you choose to, as well as I've just a couple here around, the public health unit for starting a food business or personal services. So you usually get a lot of people that ask that. I've included the links for Western's Legal Clinic, Siskin's Law Firm, which is a legitimate law firm in London that we usually recommend people to if for the future you ever need that kind of assistance, as well as there's a free tax help offered through the CRA. It's called, I think, Accounting Liaison Service, where again, you can talk with a representative, a person who's an accountant for free, or they also offer some different workshops and things like that as well for people to attend and learn about how to start doing their accounting properly from the get-go. I've included a couple of links for international students in particular. So again, if you are an international student, making sure that you're having at least a conversation with the immigration advisors at Fanshawe's International Center. They can let you know how registering and operating a business may affect you as an international student, but it is something that you can do. It's just a matter of knowing how does it affect your unique circumstance, as well as, a link for other immigration representatives. There's one place you should be looking for those. It's this link outside of the college, and that comes directly from the Immigration Center on campus, as well as a couple other articles of interest around launching a business as an international student and pros and cons of different business structure as well. So everything that I've pulled information from for today's workshop, I have spoken to, I've included links for. So if you have questions about it, that's what the recording's for. Don't be afraid to go back and review it, but also check this last slide here with all the links because it'll give you a place where you can, read a little bit more and get a bit more information that you need on some of these topics that you have questions on. And again, if you ever want to, sit down and actually just talk it out, I'm happy to do so. But then again, once we get you start asking questions about legal or accounting, that's when I'll usually defer. I'll send you to resources and I'll give you the best answers I can, but knowing that there will be some additional digging that you will have to do in the future. So for today, that's all I got in terms of content for the workshop. So I'll pause the recording here or stop it